All right. Welcome back to the Accel Advantage podcast, where we talk through decisions that business owners make every day around risk, money, and growth. I am your host, Corey Rekers, and today, on our 1-year anniversary of the Accel Advantage podcast, I am joined by our Co-President Josh Budke. Josh, welcome to the podcast.
Hey, Corey. Thanks for having me. Excited to be back. It is wild. This last year went really, really fast. And I would tell you, after a year, you certainly still have a face for radio. So happy to be doing this with you and excited about today.
I certainly appreciate you, Josh. Thank you for that. It's been
You're welcome.
been a great year. It's been a lot of fun interviewing a bunch of different people in the agency, and excited to do today's 1-year anniversary podcast. To celebrate our 1-year anniversary, we're bringing in leaders from across the Accel Group and wealth management to talk about the biggest trends that we're seeing in 2026 for business leaders just like yourselves. We've got a full house today, so without further ado, let's get this party started. So first up, we have our Director of Sales, Ethan Thompson. Welcome, Ethan.
Hey, Corey. Thanks for having me.
All right, so we're going to get started with commercial insurance, which, as you'd agree with me, Ethan, has seen a lot of movement lately. I don't think in my 22 years of being in this business, I've seen the market shift so quickly as it did on January 1st. So I'm sure you're going to get into that here in a little bit, but before we go there, let's go a little bit broader first. So what do you see as the biggest risk our businesses face here in 2026?
Yeah, well, you kind of had me at party once you got off to that note. Was pretty intrigued on what direction we were going here, but I would definitely say that so far off to 2026 it's been some kind of party. I think there's a lot of different things facing many of our businesses that we have the opportunity to partner with. And when you think about some of the biggest risks most businesses are facing, I think that when you kind of look at the landscape, no risk necessarily shows up at one time. They're all somewhat interconnected. And then when they hit pretty hard. And I think the three areas in 2026 that I know we on the risk management side of things are paying particularly close attention to, as well as I know many other businesses are as well, would be cybersecurity, AI, that seems to surface in every conversation that we have here in 2026. And then overall, just plain business resiliency. Cyber has been the number one global risk 5 years running. And unfortunately, I would say it's getting worse before it's getting better. Small businesses are the primary targets today. Most of the small businesses, they rely on outside vendors for handling of their data and their systems. And every one of those relationships that they have presents a potential vulnerability. AI is also very exciting. I know for myself, it helps pick out my clothes, create recipes for me, put together diet plans, all the great things in the world, but it's moving faster than anyone can keep up with, even the regulators. So we're seeing real legal exposure emerge around a variety of areas, be it discriminatory decision making, privacy violations, and liability when AI inevitably and simply get something wrong. That creates real legal exposure for many businesses. And I think that it's certainly something that businesses need to pay special attention to. We're seeing contractors utilize them and, with their estimation tools, manufacturing facilities using it in controlling robotics in their facilities. So it's really not if, it's when something goes awry and what are the implications there. And then there's overall business resiliency. There's no shortage of things happening in our landscape, whether it be geopolitical issues with some of the conflict going on in Iran and in Ukraine, causing some disruption in supply chain, tariffs, and other, I'd say, more credit and financially driven implications in the marketplace, causing a lot of stress for most businesses. I think the interesting thing, Corey, is that the national statistic is that only 3% of businesses would say that their businesses are supply chain resilient. And there's a lot of factors that go into that we won't necessarily get into today, but I think it's an interesting statistic that, well, I think today it presents a pretty large concern for many businesses. Many of them are not necessarily prepared for what could happen. And then on top of that, I know in our industry and several alike, there is an exodus of talent, quality talent retiring, moving industries. So I think it's more important than ever for businesses to have a plan to recruit, develop, and retain their people. It's not just good HR; it's really a survival strategy for most businesses.
Yeah, that makes sense. I know AI is on everyone's mind today, and obviously we're going to have Nick talk about that here in a little bit. It is good to know though that you are utilizing AI in such a great way to pick your wardrobe every day. You do look incredibly dapper today, so
Thank you.
nice work there.
I appreciate that.
You're welcome. Um, Switch gears a little bit. What industries are you seeing some of the biggest rate changes? I know it's on everyone's mind right now, especially the last couple months. It's gone from a very hard market to a soft market. Can you kind of touch on that?
Yeah, I don't know that I can necessarily pin it to like a specific industry. I think it's more based upon what, coverages, each individual business relies on. Take a real estate firm, for instance, that company, their coverage is really predicated on property and liability coverage. So a, rate changes in auto or work comp barely affects them. Construction is the complete opposite. Typically, there's not a lot of property, and when there are shifts in liability, work comp, and auto rates, they feel it the most. I would say the broader market is in better shape here in 2026 than it has been the last few years on the commercial side of things. Last quarter, so the end of 2025, we haven't quite got our Q1 2026 results in from CIAB yet, but renewals, across the board, throughout the United States, so an aggregated number was around 0.2%. So renewals are essentially looking flat in last quarter, and I only anticipate that speeding up and decreasing a little bit here as we continue into 2026. Small businesses were up around 2.8%. Mid-sized businesses were flat, and larger businesses actually saw about a 2% decrease. So really, if you look at it in buckets, economies of scale, the larger the business, the more, premium and exposures that are there. So your larger business actually saw more of a rate decline than maybe on the smaller side of things. I think the hottest topic, especially here in the Midwest, commercial property, that certainly has eased. We've seen some rate takedowns as well as some deductible takedowns in certain pockets. So, your habitational market is still seeing a little bit of challenges there, but by and large, most insurance companies posted underwriting profit the last couple of years. And so we're starting to see the market get more competitive in that space. Whereas work comp, that's been soft for nearly a decade. So rates have continuously dropped on that side of things, and has been a very competitive market for work comp. And casualty has also come down in most cases. Unless you're a business that relies on a pretty high umbrella limit, we've seen some challenges continuing in that space from a capacity and pricing perspective. And then the last exception, really, of all of it is commercial auto. So we have 58 straight quarters of rate increases in commercial auto. So last quarter, the average commercial auto rate was up about 6.5%. And there's a lot of different reasons for that, but claim values have doubled over the past decade. We've seen issues with social inflation, litigation funding, all in all, really driving some costs up in that marketplace.
So really a very nuanced market.
For sure.
Obviously, you and I have debated this for years. You would think at some point the work comp market would flip. I think everyone's been waiting for that for the past 10 years. I think if you look at that market in particular, it's down over 60% on the base rates, at least here in Iowa, the last 10 years. So to kind of, I mean, if you're a business owner, I guess, how would you prepare for your renewal this year, knowing there's so much nuance in the market?
Yeah, no, I think that's a great question, and I think the simple thing is start early and start conversations with your advisor early. I wouldn't wait for the paperwork to show up. I think one of the biggest mistakes I see some businesses make is really adopting a philosophy of shopping around, having several agents kind of jumping in the marketplace to represent them, thinking that that's the smart play. Usually it's not. The better move is to sit down with your current team, understand what's happening in the market, what they can expect with their own program, and then work with them to build a strategy to get the results you're looking for, whether that be improved pricing, better terms and conditions, things of that nature. Giving your advisor a heads up on any changes to your business, and walking through any losses that you may have had, and talking through what you've done to address them. It goes a long way. I generally say the market rewards businesses that can tell a good story. So if you've had some loss issues, being able to communicate with the market what you've done to make yourself best in class risk, you're going to see better results from that rather than just shotgunning the market and hoping for the best.
That makes sense. Pick the right, I would say, horse, if you will, to really represent you in the market and not maybe pick a bunch of different folks all at once and have them shotgun the market. I think business owners don't realize how they're viewed by underwriters when they do things that way. I guess if you're an owner right now, is there anything specific that you want them to look at in terms of what the renewals coming up? Is there anything that they should review? Maybe it's line of coverage. Can you be more specific, I guess?
Yeah, I think that, with the market starting to soften, I think it's a very great time to really take a look at things and ask yourself, does my insurance reflect what my business looks like today in its current environment? Most people buy a policy, they stick it in the drawer, stick it on a shelf. It's a really great dust collection system, and then they don't look at it again. That's fairly common. But in reality, most businesses change over time, and the environment around them also changes with it. The risks of change, your coverage really needs to keep up with that. So I think taking a deep dive as far as what is facing your business and the current state of it is probably the first step. I say this all the time: insurance isn't just a line item expense; it's protection for your business and your balance sheet. So I'd encourage business owners and leadership teams, make sure that you're not just sitting on gaps that you may not know about or just haven't taken a deeper dive into addressing them. Make sure that you're also not overpaying for coverage. I'm certainly a proponent of there is such thing as overinsurance, but you may outgrow your insurance coverage, or you may be sitting on gaps. Both happen all the time. A good advisor should be bringing this to you proactively, certainly. But I think that it's also a great time for businesses to take a step back and really assess the landscape for what their program and what their risk looks like, and make sure that they're appropriately addressing it.
Perfect. Ethan, thank you for your time today. Um,
Appreciate it. Thanks for having me,
yeah,
Corey.
anytime. All right. Next up, we've got our Chief Operating Officer and Chief Legal Officer, Nick Thompson. Nick, welcome to the podcast, my friend.
Hey, thanks for having me, Corey. Good to be back on the podcast.
So, Nick, I wanted to give the audience your thoughts on some of the things that you're seeing with AI. Ethan touched on it a little bit here, but our business owners should really be aware of kind of what's happening in that realm, that piece of technology, how it's affecting the entire workplace. Obviously, you've been working with our teammates and integrating AI into our agency. Can you give the audience a little more insight in what you're seeing, and then how our business owners can really embrace it? Because I think we'd all agree it's coming fast and it's here to stay. So I'll let you elaborate on that.
Yeah, I think, when I think about AI and when I talk to people about AI, I'd say there's a common view that it's somewhat of a double-edged sword. It's got tremendous opportunity that's presented, but it's also got a tremendous amount of risk associated with it too. As we're sitting here in the middle of April 2026, one of the things that is taking the news somewhat by storm amongst, I suppose, a lot of topics, lots going on in the world right now. But Anthropic, the AI maker, has come up with a new model called Mythos, and the benefit and the problem with Mythos is its incredible power. And what testers have found is that it's capable of identifying and exploiting previously unknown vulnerabilities in just about every major operating system and every major web browser. So the tool, while ostensibly could be used for good to identify these problems for the quote unquote good guys and let them know so they can fix the vulnerability before a hacker discovers it, the tool also is able to not only find the vulnerability, but come up with it dastardly ways that different vulnerabilities could be stitched together to create a massive attack. So that's just an example of what's going on right now. And as you mentioned, it's moving really quickly, and it's not going anywhere. I think when people think about AI in business, they're usually thinking about efficiency, saving time and cutting cost. And all of that's real stuff. And we're realizing that in our business as well. What doesn't get talked about, though, maybe enough is that risk side of the equation. And as someone who's helping to integrate AI into our own operations here at Accel and Accel Wealth Management, the risk is coming from really simple everyday mistakes that businesses are making right now without probably even realizing it. So I think the biggest one that I would say is that data is leaking out the front door through AI tools. And what's happening is that in many organizations, an employee needs to summarize a client file or pull together a report. So they paste information into Chat GPT, a free version, or some other AI tool, again, free version that they're using that doesn't come with the security that you get if you go to more of an enterprise grade AI tool. And what people don't realize is that depending on the tool and the settings, the data may be stored, it may be logged, or even used to train the AI's next version. And while that's maybe just embarrassing for some businesses, for others, it could pose serious legal or compliance problems for them. The other risk that I put right next to that is what AI is doing on the threat side. And, we used to tell people when it came to phishing attacks to watch for bad grammar, somebody posing as a prince from another country that just needed $20,000 for a couple of days, weird email addresses. That's how you would spot a phishing attack. But the threat landscape has shifted, and attackers now can use AI to write really well done, grammatically correct, even personified emails that sound like your CFO or your bank or a trusted vendor. And in addition to that, deep fake audio and video are being used in fraud schemes as well. So this is really impactful to small to medium sized businesses who are disproportionately targeted because they don't typically have the same security infrastructure that a larger enterprise might. So what's the fix? I think for most businesses, probably the most important thing you can do is to have an AI policy in place, having a written policy that's cascaded down to your employees, and by creating that, you can close a gap that otherwise would exist. The other piece to that, when it comes to the threat landscape, is just good education. There are vendors out there that will provide ongoing education to your teammates so that they can understand what technology is allowing criminals to do and to help them avoid getting attacked themselves.
That makes sense. I think the fear kind of comes from a lot of places. You touched on this a little bit, Nick, in just talking through what Anthropic's doing, and but I think what people maybe fail to realize, some of the things that used to be maybe your job, so like data entry, things of that nature. I think it's most exciting for our firm is that it really allows us to serve our customers better, being able to answer the phone promptly, get in front of people in a more timely manner, because a lot of their time isn't spent on doing some of those things that, quite frankly, take a lot of time, but are not seen by the client. Can you kind of share some of the things that maybe we're doing that others may do as business owners that can kind of help in that with their business?
Yeah, definitely. I started with the negative, and probably it's nice to move into what some of the positive things that can come from AR are and
You're
how we're
welcome.
using this in our business. So thanks for that. I mean, it isn't just enough that Ethan's upping his fashion game from AI. There's other power out there as well. And I would say that the key use case in our business, without getting into every single different tool that we're using, is really the ability to synthesize information and take it from one place and put it somewhere else in a different format. When I think about our business, especially the insurance side of it, we work with a number of different insurance carriers, and somewhat by design and somewhat because of regulatory constraints, they don't all speak the same language. And so we're taking information that's common between essentially, but client information that's common that could be used. That needs to be used for different insurance carriers, and we can use AI to plug that from one place to another. And otherwise, that previously would be a very, an individual task that somebody is doing, an administrative task that doesn't necessarily add value, but obviously it's something that's really important that needs to be done. So that's kind of one of the key uses for us right now. And another one that has really just come to the forefront in the last couple of months is the ability to build our own software programs. And these aren't something like building a new Microsoft Word or something of that level, but there are little niche tools that are helpful either to our clients or helpful to our teammates that we're now able to use AI to code those, and we don't need to have a software developer on staff to do that, because AI is actually able to build the tool, and then we're able to validate that it's working properly, and then and deploy that. So we're just in the early phases of that, but we've got a lot of ideas for things that we can use that for, and we've got some prototypes built and are starting to refine those and make them to something we can deploy and get a lot of value out of. I mean, ultimately, I guess I would say I see AI as a force multiplier that's going to help us deliver more personalized service. I think a lot of the fear is that service will become less personalized, but our business is inherently a relationship business. And if we can build tools that allow us to spend more time on the relationship, more time adding value to our clients and providing insight, then that actually allows us to be more personable. And I think for the sake of our teammates, that's where they get a lot of energy. And if they can avoid having to do sort of administrative and ministerial tasks, they can spend their time there. So really excited about what the possibilities are there.
I'm glad you ended on the positive note there. So I appreciate your time.
I try.
Yeah, a lot of things going on there, and obviously an interesting topic that we'll probably dive into in a future podcast for sure. So would love to have you back on.
Thanks.
So let's move it to personal lines. Personal lines actually has seen some significant change, whether it be large deductibles for clients that have really had to navigate that over the last 4 or 5 years. The addition of wind hail percentage deductibles on roofs, which I know has created some pain points for clients when it comes to a claim, and then pricing increases that are pushing double digits literally every year since 2021. So, all that said, we are seeing some rate relief in personal lines with both the auto and Ethan talked about earlier the stabilization of the property market. So today we've got one of our best and brightest in our personal lines department. We got Tyler Starbeck here to talk through just some things our listeners should expect from the home and auto insurance market in 2026. So Tyler, welcome to the podcast.
Yeah, thanks, Corey. Happy to be here.
So Tyler, from your lens, what do you feel has been kind of driving that large increases and some of those cost increases the last 4 or 5 years?
Yeah, so in relation to the price increase there on premium, everything's so much more expensive these days. When looking at the auto side of insurance, when you get into a fender bender, you're not just replacing the bumper anymore. There's cameras, there's sensors, someone's got to calibrate them. Cost of labor's way up, and the parts that you need to put into the vehicle are just so much more expensive. And on the other side, on the home, we've seen the cost to rebuild a house just shoot through the roof. Same thing, materials and labor, and also the supply chain issues like Ethan mentioned earlier. So even if the claim frequency is still the same as we've seen over the years, we're seeing that the severity of the claim is much higher than it was before. Insurance companies, they're just trying to keep up with those rising costs right now, which is why we're seeing those premiums go up over the last couple of years.
So you started as doom and gloom, just like Nick. So let's talk about some positive things. You talked about some rate reductions. We talked about that a little bit. You seeing some options emerge now in the marketplace that maybe our listeners should know about?
Yeah, absolutely. So good news is we are seeing it kind of stabilize a little bit here. Obviously, the rates aren't going to drop overnight for us, but we're seeing a plateau come here. And even with some carriers, they're dropping down slightly. They are getting more competitive as time goes on. And when we see one player in the market, people usually follow. Like you mentioned, deductibles are increasing. Some carriers are requiring that wind hail deductible. Even if you don't have that required deductible, might not be a bad idea to go in and see if you can raise that just to help you save on some premium a bit. Another way that we can save there is just making sure all the discounts that are available and apply to you are applied to your policy. If your home and auto aren't bundled, always look at that. That usually offers a huge discount. Things like driving programs and telematics that track your driving. And then things like if you put a new roof on, if you updated the home recently, or even if you have something as simple as a Ring camera or a ADT system around the home. Like I said, different carriers are pricing risks differently right now. What was best for you a couple years ago might not be the best option for you anymore. So it never hurts to look around and see what's out there and see what can best fit your needs. One thing in regards to price, right now might not be the best time to, just focus on that price and make sure you're getting the lowest price out there. 'Cause then you tend to cut corners, you tend to cut coverage that might be essential to you. It's always good to work with an agent, compare options, and see, like I said, the best scenario for you, whether that's the higher deductibles. You just want to make sure that come claim time, you're not getting burnt. But yeah, there's definitely options starting to open up here. It might help to take a proactive review and assess your coverage. That can go a long way right now.
Yeah, that makes sense, Tyler. Obviously, great stuff there. Really appreciate your work and what the Personal Lines team's been doing the last few years to really, I would say help our listeners navigate what we know has been a pretty frustrating market in home and auto the last few years. So sounds to me though like bluer skies are ahead. Obviously, shameless plug for the team here, but for those that do want to review, Tyler, Luke, rest of the team are well equipped to help you. We now have over 15 different markets that we can access to compare coverage, price. Again, so thanks, Tyler, and appreciate your insight.
Absolutely. Thanks, Corey.
Josh, I think we're at the point of the podcast now where the listeners are very anxious to learn more about benefits and wealth. So I am going to turn it over to you, my friend, to take it from here.
Thanks, Corey. Appreciate it. Yeah, happy to jump in here. And as you mentioned, for our listeners who have held on to this point, we're definitely going to get into more of the exciting piece of Accel, which is the benefits and wealth management focus here. So we'll start a little bit on the employee benefit side. The benefit side remains, I would say, one of the biggest challenges for employers. Average costs, unfortunately, continue to rise when we look at pharmacy and medical trends. Those are certainly not slowing down. And the employee benefits spend, again, from an employer perspective, typically it's the second largest expense just behind payroll for most of our employers. So again, pretty big, a key area for them to keep an eye on.
So from your lens, then, what's the biggest health insurance trend this year?
Yeah, we're obviously early into the year, but a few trends that we're seeing and keeping an eye on, specific to the health insurance marketplace. We continue to have a very limited number of insurance carriers in our marketplace. We have started to see a few new carriers jump in with a level funded product. There's been talk around and direct primary care clinics. Again, creative ways we're seeing carriers trying to help employers save on their healthcare expense, on their insurance expense. A couple other, I would say, trends. Your employee paid, or sometimes consider called voluntary products, whether it's pet insurance, whether it's more of the traditional life and dental products, disability, those are still very desired products that employees are looking for. And so that offering by employers, regardless of who is paying for those products, that's something we're definitely seeing something on, and kind of that, again, that continued trend, I would say. This gets into the retirement side a little bit, but the need and request for financial education, the ability to communicate to employees regarding those benefits, that is something that we're certainly seeing a broader ask, and again, more information specific for employees in that area. And then I would say the market for self-funding. And I know we'll spend a little bit of time just from a overall funding perspective, but self-funding continues to be a challenge. And I would say from a stop loss marketplace, we're not anticipating that softens here in 2026. So it still should be a consideration for those mid-sized to large employers who have traditionally kept in a fully insured environment. It's something that they do need to pay attention to and take a look at. But again, that marketplace is going to continue to be a challenge. And then the last thing I would say, just the continued trend on the pharmacy side, employers looking and trying to adopt solutions to try to control those costs. Typically, or I would say on average, we'll see 20 to 35% of an overall health insurance budget is going to the pharmacy side for those employers that are not working proactively to control that. And that's a pretty significant expense. So again, just an area where we're seeing more and more employers really trying to focus some time and attention on, and trying to provide world-class benefits for their people, but in a manner that they can afford to do so.
Makes sense. You just touched on this just a few seconds ago on self-funding being a challenge with some tough stop loss in the market. So can we dive in a little bit more in terms of some funding strategies for our employers and maybe what they should be aware of as we kind of move into the second quarter in 2026?
Yeah, absolutely. I mean, again, I mentioned you've got limited insurance carriers, but one of the things that we talk with our groups on and that employers need to be aware of is how they are paying for their health insurance, how they're paying for their employee benefits. The buzzword, the captives and coalitions, those are out there and something for employers to consider. But we are starting to see some of those traditional coalitions, which essentially it's a multi-employer group. We're starting to see some of those lose competitive advantage. I actually spoke with the group this morning, and their whole program actually is closing down middle of the year. And
Mm.
so, what employers are really struggling with the idea of subsidizing another employer in a smaller pool or a smaller, again, coalition. They're looking to see what it looks like outside of those arrangements. And so having a standalone policy, just as an example, it's not truly standalone. There's still an insurance component that's important. And we're seeing that, again, more of as a viable path once again, and
Sure.
folks getting out of those programs and more, again, looking at all of the options as far as how to fund their health plan.
Interesting. Obviously, you get to meet with employees all the time when you do employee meetings, when you do introductory, um, individual meetings with those folks, literally of all sizes. But beyond the addition of like pet insurance, what do you feel employees are really caring about today when it comes to their actual benefits?
Yeah, great question. And I think you mentioned pet insurance. It's one of those things where a few years ago, you really maybe wouldn't have thought that would be a trend.
Mhm.
But as far as from a generational perspective, how the different generations in our workforce, how they're viewing what a true benefit is to them, that's something that employers are, again, keenly aware of and wanting to understand if they're going to provide these benefits. Are there people finding value? And so employers, from I would say from a consultant perspective, again, working with groups, it is understanding their needs. And here's a recent example. High deductible health plans, health savings accounts, those have been around for years, and where many employees still truly view that as a fantastic benefits. Others are looking at as essentially being functionally uninsured, meaning they're avoiding care up until they hit that deductible. And so it's cost prohibitive for them. So an employer, again, understanding their people, understanding their culture, understanding how the benefits that they're offering are being viewed. That's again how they get the most out of it, because at the end of the day, again, employee benefits are really being offered for an employer to attract, retain key employees, top-notch talent. And so, again, just wanting to make sure there's value in what they offer.
That makes sense. And so, as a broker, really getting to know that employer, getting to know the employees, and really what's important to them sounds to me like it's of interest and a big deal, especially with those generational wants and needs. Like I was kidding about the pet insurance, but you see it every day. I'm sure there's individuals that's important to.
Yeah, no, again, just it absolutely is. And again, how employers communicate and educate through the different generations. Again, that's key, and how they obtain that information. So yeah, so I appreciate you bringing that up.
Yeah. What about the future of workplace benefits? Obviously, we talked about AI a little bit in the property casualty section. How do you feel that's going to impact the industry?
Yeah, and I appreciate Nick and Ethan and the conversation around AI from a benefits perspective. What we're starting to see, insurance carriers, their ability to underwrite is starting to change, and what we're hoping that leads to is more competitive pricing. Or I would say they would argue more accurate pricing. So really what we're taking a lens of more short-term planning may be in order, because what a 2, 3, 5-year plan certainly is going to be condensed from our lens, meaning uh, how AI impacts the insurance carriers is going to directly impact what our employers have and what they can offer to their employees. So it's a very, very intriguing time. I'm certainly glad that we have smarter people than myself taking a look and keeping an eye on the AI side of things. And our insurance carrier partners are certainly doing the same, because again, back to my comment around the retaining top-notch people, being able to afford world-class benefits is a big deal, and something that we want to be able to continue to offer and work with our employers to do so.
Makes sense.
I appreciate all of the benefits. Specific questions. I know for time's sake, I need to keep things moving a little bit. So I'm excited. I get to introduce actually our next guest as we pivot to the world of retirement and wealth management. So I've had the good fortune of knowing Stacy Brass for many years now, working alongside her at Accel. She's truly one of the best in the business. So really appreciate you joining us, Stacy.
Thank you, Josh. You are too kind.
Well, hey, why don't we start off, if you don't mind? Would you get into a little bit of the retirement plan trends that businesses need to watch?
Yeah, for sure. 20, as you said, I've had the fortune of been in this industry for a long time, and 2026 is shaping up to be kind of an interesting year. I would say there's 5 or 6 key things that we're watching right now. And they're all centered on outcomes. How can a plan sponsor take the time, energy, investment of resources that they're pouring into a 401k plan and produce better retirement outcomes for their employees? And I think that first trend is automation is the new baseline. I don't think it's, automation is auto enroll, auto escalate have been around for almost 30 years. I think it's taken that long for them to become the baseline, but they aren't so much a choice anymore as they are the standard. And the stats are there, right? We've been able to prove that auto enroll, auto escalate definitely drive the right behavior for employees and result in better outcomes. So it's not only enough to have auto enroll, but employers are now looking closely at whether those default contributions are actually high enough to move the needle on retirement readiness. And in simple terms, automation isn't just a feature anymore, it is a responsibility. I think the second key thing we're looking at is we're seeing a shift in the industry toward kind of back where we started, pre-ERISA, 30, 40 years ago, is that employers and employees are now starting to think about 401k plans as almost an individualized pension. You've maybe noticed, Josh, when you get your 401k statement, most vendors will now tell you what your retirement account balance is going to translate into in terms of a anticipated or projected income in retirement. Employees want to know not only how much are they accumulating, how much are they saving, but what is that expected to look like in retirement? What is that actually going to produce in terms of income? So I think that's been kind of an exciting trend, and interesting to see employees thinking about what does this actually mean for the quality of my life when I get ready to retire.
Mine told me I have too many kids and I'm going to work for many, many years. But yeah, you're spot on. And it's super helpful information, again, from an individualized perspective. So yeah, that's been a great feature.
Well, the good news, Josh, with all those kids, you'll have lots of basements to choose from. So whoever's got the nicest home can be your retirement plan.
There you go.
I think one of the third thing we're seeing and one of the things we're actually rolling out here at Accel right now is a shift toward personalization in communication and education, kind of relating back to technology that we spent a lot of time talking about. I don't think it's just enough anymore to put out good educational content. Employers want to see it customized and personalized. Traditional retirement education assumed that everyone needed the same message. And in reality, a 28-year-old and a 58-year-old are solving completely different problems. So we're in the process right now of actually rolling out a life stage based communication and education plan, complete with a hub that our employees and our participants in our plans can access. So whether you're a 23-year-old trying to figure out budgeting or a 55-year-old working on your legacy plan, resources there at your fingertips that are tailored for you. And so I think that's really just an exciting trend in the industry that technology is enabling us to do efficiently. The fourth thing I would say is one of the more exciting trends I've seen in my 30-year career, and that's around pooled employer plans. This was part of the Secure Act, and it creates an opportunity for plan sponsors to band together. I've heard clients of mine refer to it, kind of compare it to a captive almost in the property and casualty world, and come together, create economies of scale, and really offload some of the administrative responsibility, the fiduciary responsibility associated with maintaining a single employer 401k plan. They can avoid the expense, the time-consuming things like a 5500 audit, and benefit from the economies of scale by joining together with other employers. This often translates into significant benefits for the employees, including lower investment expenses, lower fees, and a better participant experience. So it really is a neat win-win. I know as we've had the opportunity to look at it and compare it with current clients of ours as well as new prospective clients, the significance in savings and experience is pretty dramatic. The fifth trend is really around complexity. With all of the changes that we had with the Secure Act and then Secure 2.0, being aware of the compliance and fiduciary risk is increasingly important with a 401k plan. Whether it's the new Roth catch-up rules, plan document restatement deadlines, payroll system changing, expanding state mandates, 2026 brings some real operational and fiduciary challenges. The risk for employers isn't just getting something wrong. It's maybe not even realizing that things changed and what applies to their plan. So we're seeing smart organizations, smart employers really being proactive, reviewing their governance processes, updating documents, and asking better questions of their advisors. The final trend I guess I would comment on is that retirement plans are really becoming part of that broader workforce strategy. Employees who can't afford to retire on time create real business costs, impacting succession planning, benefits expenses, and productivity. And in 2026, we're seeing employers increasingly using their plan data to understand retirement readiness across their workforce and align their benefit strategy with their long-term people planning. It's no longer just about benefits, it's about sustainability.
And you bring up just a great point. I think as we look at our clientele and for the folks that we have the privilege of working on the benefit side and retirement side, just that holistic look. And again, to your point around workforce strategy, we're starting to see that become more and more important. Obviously, we would love to do business with all of our clients in each different lines, but just the idea and the true benefit that they see by having more of again a holistic approach is just super important. So I'm just going to mention I'm glad you went there on this piece.
Yeah, you and I have been brainstorming about the convergence of health and wealth for a long time. And I think that's just becoming more and more important. As you mentioned it earlier, these plans, these programs continue to get expensive. Employees demand more from their employers. So it is a great opportunity to try to be efficient. So, I think I'd summarize it as the most effective workplace retirement plans in 2026 are automatic, they're personalized, they're compliant, and they're aligned with how people actually live their financial lives. And so again, I guess if you're out there in the audience and you're listening, if you have not reviewed your plan in a while, it is a great time to do that.
Yeah. Thank you, Stacy. Great information and completely agree and would say with all of our topics today, if we can help you, help your business, if you have questions, if we can dive deeper into any of these areas, definitely please let us know. We are more than happy to help. So staying within the world of wealth management, but now spending some time more on the individual side, I had the privilege of introducing Jason Willenborg to the podcast and let him discuss some items impacting our clients on the individual side. So welcome, Jason.
Thank you, Josh. It's great to be here. Yeah, what I want to do is kind of talk about maybe 4 different topics that kind of intercoordinate with personal investing and financial planning. The first topic is what are some of the planning trends that we're seeing in 2026? I would say every year is a different year. There's always tax law changes. There's always investment law changes that come down the pipe. And one of them that is benefiting quite a few people this year is that effective as of January 1st, 2026, the federal lifetime estate gifting and tax exemption has increased to $15 million per individual or $30 million for a married couple. This change was enacted by the One Big Beautiful Bill Act. It replaces the scheduled sunset that was going to have the exemption drop back down to roughly around $7 million. And you might have a lot of people out there saying, well, I don't have $7 million. I'll never have to worry about that. But virtually by having this lifetime estate and gift tax extended out and increased to $15 million, it virtually eliminates estate and gift taxing for all but the extremely wealthy individuals now. Why this is important in our state is you have a lot of family farms out there that have quite a bit of land, and that land can accumulate in value quite a bit. And if you're not doing your legacy planning correctly, you can have quite a bit of an estate tax on that land. And we've seen horror stories where families have to sell the farmland at discounted prices just to cover the expenses of the estate tax. By extending this out and increasing it, it virtually eliminates that problem. So that's a great thing that we saw come down the pipeline in 2026. But I would always say you want to stay away from fancy trends, and it really comes down to holistic retirement planning. You want to incorporate in not just how diversified your investments are, what strategies you're trying to achieve with those investments, but you also want to look at tax planning and seeing how efficient you can be with your investments when it comes to your tax planning, and also mitigating risk. Especially nowadays, we're seeing a lot of volatility in the markets, and anything you can do to soften the ups and downs and make it a smoother flow for you is probably going to do a lot of good psychologically to a lot of people. The next thing I wanted to kind of talk about was where do I kind of look at where the market outlook is for this year? Financial markets are kind of defined as a broadening bull markets right now. They're fueled by resilient U.S. growth, incentives to law changes, as well as driven by AI productivity. However, while most analysts are generally optimistic, there is some concern that with higher valuations in the market, geopolitical shocks like the surging of energy prices due to the conflict with Iran is going to create a volatile path for the next half of the year. And so there again, it brings in the fact that depending on your risk tolerance, there might be some things that you want to do talking with your financial planner to mitigate some of those risks moving forward. What individuals should be focusing on when it comes to investing? Well, obviously, Ethan and Nick both brought this up, and I think you did as well, Josh. AI has brought a lot of benefits to our world, and that includes the investing world. However, there's a lot of downsides to technology as well. Personal identity theft and cybercrimes are at all-time highs. Investors should be coordinating with their financial planner to try to reduce some of these risks as well. Staying diligent by monitoring your investment accounts, maybe adding two-factor authorization to some of those accounts. If you are taking quite a bit of money out of them or contributing money to them, adding a cybersecurity policy or checking with your individual insurance provider about umbrella policies that could potentially help you if your identity was stolen. The last thing I kind of want to touch upon is what advice would I give to young investors that are starting out? Obviously, again, generations, things have changed over the past generations when it comes to investing. Again, a lot of technology is being used right now with younger investors, and they're trying to go out there and they're trying to hit the home runs right away. I would say you don't want to really go out there, and the game really isn't to try to pick all winners. You're never going to be able to do that completely. The main focus you should have while you're a younger investor is the managing of systems, making sure that you have automatic contributions going into whether it's your 401k where you're getting a match or contributing to an individual IRA account, whether it be Roth or traditional. You want to make sure that you're automatically having money go into those And I always had an advisor say, you always want to make it hurt a little bit in the beginning, because eventually down the road, you're going to kind of forget that that money is going in and contributing to those accounts. Stay disciplined with the objectives that you're trying to achieve, and then just stay the course. And again, I can't hound enough. And I actually was talking to a client today about this, where he had his own individual account that he was working on doing his own things and didn't know a lot about some of the intricacies of transferring over IRAs from one IRA to another. He thought he was going to have to pay taxes on all of it. Working with a financial planner is going to give you vast amounts of benefits for the expenses that you might incur working with that said advisor. Because there's a lot of things out there that we work with every single day that the general population that tries to do investing on their own just isn't going to be able to know all that stuff. And so it's always great to have kind of a second opinion that you can bounce off your advisor and then continue to build that relationship with your advisor throughout your life.
That's great, Jason. Really appreciate you sharing that. And I don't think I fall into the young investor category anymore. But I tell you, Jason and our wealth team, they do a great job, and they always humor me with all my market volatility questions. But certainly a great attribute for our clientele. Again, our wealth management team does a fantastic job. So thank you for sharing all the insight today. And Corey, I think we're close to needing to wrap things up.
I think we are. So one thing I'll just share, one thing about today's conversation really does show how interconnected all these things really are, from insurance to technology to financial planning. There's a lot of correlation for our business owners regarding each of the topics. And being that we have experts in all facets of insurance, risk management, wealth advisory, and benefits, we truly are well positioned here at Accel to help our clients navigate this ever-changing environment that the group talked about today. So really exciting stuff. And yeah, really just happy for the group that came in and talked to us today. Did a great job.
Yeah, totally agree. I think our team is in a great position to help make an impact this year and into the future, and really excited about all the opportunities ahead. So again, to your point, appreciate everybody joining us today.
I think we're at the, we've come to the end of the 1-year anniversary podcast. So if you'd like to learn more, please check us out at acceladvantage.com and excelwealthmanagement.com. And please make sure to follow us on Facebook, LinkedIn, Instagram, and on our YouTube channel. We'd love your feedback, so please leave us a review, subscribe, and share the content with those you feel would benefit from what our team shared today. A very special thank you to Ethan, Tyler, Stacy, Nick, Jason, and Josh for joining me and making the 1-year anniversary podcast so very special. Remember, at the Accel Group, we've spent nearly 100 years helping business owners protect what matters most, and that's the Accel Advantage. We'll see you next time, everybody.
This podcast contains general information that may not be suitable for everyone. The information contained herein should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented herein is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Accel Wealth Management does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstance. Past performance is no guarantee of future results. Securities offered through registered representatives of Integrity Alliance LLC, member SIPC. Advisory services offered through Accel Wealth Management, a registered investment advisor. Integrity Wealth is a marketing name for Integrity Alliance LLC. Accel Wealth Management is not affiliated with Integrity Wealth.